This is Alan Bush with the daily financial forecast for Thursday, August 11th. Starting out with the stock index futures, we are seeing prices higher this morning. Much of this linked to better than expected earnings at retail companies. We also are very close to making new historical highs in some of the indices. I think that within the next couple of weeks that will be the case, that further gains are likely, and we can anticipate this bull market to persist probably through the balance of this year, and I would not be surprised to see gains continuing into next year. So we do feel that low interest rates is the fuel that will sustain this bull market in the indices. Now moving over to the currencies, the dollar index coming under quite a bit of pressure yesterday. This due to the growing realization or growing belief that the Fed may not be in a position to raise interest rates anytime soon. There was a quick drop in the probability of a rate increase down the road. So that took place yesterday, and that dominated financials, including adversely affecting the dollar index. However, today, the greenback trading a little bit higher. Looks like mostly short covering. Longer term, though, we do feel that the dollar index will trend higher, since the Fed is still the only major central bank that is likely to raise interest rates, even though that rate increase may be quite far off into the future. Also seeing some pressure in the pound after home sales numbers coming in quite a bit weaker than expected, falling by a rather sizable amount at the worst rate since 2008. And the Canadian dollar and the Australian dollar higher as industrial commodities continue to work higher, with crude oil now showing some good gains. So we do feel that the Canadian and Australian will probably hold up relatively well longer term as commodity prices recover. Now moving over to the interest rate futures markets, pressure at the long end, namely at the 30-year bonds. We are seeing the bullish influence of accommodation around the world, I think gradually being offset by prospects of inflation. Ultimately, I think the inflation influence will dominate. So I think any gains in the credit futures markets should be used as a selling opportunity. Once again, inflation is coming back. It's rather slow now as far as inflation levels, but ultimately it will accelerate. And we're already seeing inflation numbers around the world showing increases. Even today we had the import price index here in the U.S. coming in up 0.1%. The guess was for a decline of 0.4%. And that takes us to the precious metals. Inflation is the dominant influence that has supported the indices, the gold index contracts, gold and silver, various products. So look for more of the same. Any breaks in gold and silver should be used as a buying opportunity. And this is probably the beginning of a multi-year bull market for both gold and silver. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.